Hello and welcome to CNBC-TV18. You're watching our new show, Global Lens, right here from Singapore. Now, Singapore is a country with which India has a very close economic and business partnership. There are at least 9,000 Indian companies registered and working out of Singapore. Singapore is also the leading source of FDI into India. Over the last 25 years, 160 billion US dollars has come from Singapore investors into the India market. Clearly, both countries are looking to elevate the partnership with a comprehensive and strategic roadmap. I caught up with Shilpak Ambule, India's High Commissioner to Singapore, to know more about the India-Singapore opportunity. Listen in. Let me begin by asking you, how are India and Singapore raising the ambition in ties? We signed a comprehensive strategic partnership, decided to elevate the partnership. What does this really mean for business to business and economic ties?
Thanks, Parikshit. I'll rewind back to September of 2024 when Prime Minister Modi paid a very successful visit to Singapore. And just 1 week before his visit, we had what we call as the India-Singapore Ministerial Roundtable meeting, where there were 4 ministers on our side and 6 ministers on the Singapore side. And they identified 6 areas of collaboration. All these areas, the cooperation within these areas was consolidated during Prime Minister's visit. First area is the whole skilling landscape, where Singapore has a very well-developed skilling infrastructure, and we are trying to see what we can do back home using their advantage in this sector. Second area is the connectivity space, both maritime and air connectivity. Our ports and shipping minister was here, and we signed the letter of intent for building a green and digital shipping corridor between India and Singapore. Third area is the advanced manufacturing space, where we'll go into semiconductors. We signed an agreement during Prime Minister's visit. In fact, both Prime Ministers visited one of the semiconductor units in Singapore, and we are trying to see how more we can develop our semiconductor sector with the help of Singapore. Fourth area is the health, where we have signed an MOU and looking for more areas of collaboration. Fifth is the whole digital infrastructure, where we have a UPI Pay Now link, and we're trying to do more. And sixth is sustainability and green growth, which includes sustainable aviation fuel, waste to energy, and many more other areas.
Right. So it seems to be a very comprehensive partnership going forward. Now, in terms of FDI, both in 2024 and also for the last 25 years or so, Singapore has been the biggest source of FDI for India. In the current fiscal, what do you feel will be some of the areas which would attract the highest FDI from Singapore?
Well, we have most of the Singapore companies invested in India. They're trying to expand and do more. I'll give you 2-3 examples, like Sembcorp, which is very big in renewable energies in India. It is also trying to see if we can develop few industrial parks in India. CapitaLand and Keppel both are looking at developing data centers, business parks and IT parks. We have the PSA, which operates ports, which has one of the biggest terminals in JNPT and is trying to do more. We have Sabrana Jurong, which does consultancy and town planning, and many other companies. Of course, you have investors like GIC and Temasek, which are actively looking to increase their exposure to India and expand India in their portfolio.
Right. Speaking about semiconductors, now this is a very important area for India in terms of self-reliance as well. How much investments do you specifically expect to come from Singapore in the semiconductor area, and how are we looking to increase this cooperation for our advantage?
2 or 3 points here. One, we are trying to see Singapore has a very good semiconductor ecosystem. By that I mean most of the, not the mother fab, but the supply chain participants in the fab are present here, like the gas producers or equipment makers, tool makers, substrate makers. Now they are actively looking at India as a market and wanting to do more. Second is the whole skill space in semiconductors. It's a very advanced skill requirement. So we have many Singaporean institutions which have done that program well, and we are trying to see how we can collaborate with that. And few of the big fab companies world over which are present in Singapore are trying to see if they can also go and invest in India. One, of course, is a good example of Micron, which is present here and in Malaysia and is now doing one plant in Sanad in Gujarat.
Right. In terms of trade, could you give us a sense of what is the total bilateral trade currently, and how would you want to expand the trade partnership?
Well, trade has been growing, was 35 billion last year, and we are actively looking at more areas to expand that trade. Investment and trade goes hand in hand. So once the investment flows grow, naturally trade will also grow.
Right. I would like to ask you about Operation Sindoor. Ambassador, there has been a very strong diplomatic outreach that India has started in order to make people aware about Pakistan-sponsored terrorism, to isolate them on the issue and also tell them why we launched Operation Sindoor. How successful has that mission been, and is this going to be a continuing endeavor?
Singapore was one of the first countries which condemned the terrorist act on 23rd of the terrorist attack happened on 22nd. They issued a statement on 23rd. Both the Prime Minister and Foreign Minister tweeted, and the Foreign Ministry issued a press statement. We had the group of MPs, members of Parliament, come here 2 days ago. They had good meetings at the political level. They had a good interaction with the press as well as think tanks and with the investor community. So a common message which came out was that Singapore stands strongly with India in its fight against terrorism.
Right. Ambassador, we see a lot of geopolitical tensions globally, a lot of trade tensions globally, and that's why bilateral relationships become very, very important. As an old ally that we have in Singapore, which are some of the areas which you feel are probably untapped, which need more focus, and areas where India would like to have more access in Singapore?
Oh, well, this year marks the 60th anniversary of our diplomatic ties. It's also Singapore's 60th birthday. President Thurman paid a very successful state visit to India in January. One thing which we've noticed in the last year or so is many of our states are coming out to attract investment. Chief ministers and different delegations have come to Singapore to pitch for their own state and what incentive packages these states are giving, and which is very good because Singapore is looking at going in different parts of India. Like when President Thurman visited Odisha, we signed 8 agreements with the state government of Odisha. So, I mean, from that point of view, yes, Singapore is looking at the entire country and different states where all they can go and where all they can take advantage of our market.
And finally, sir, when it comes to political alignment, alignment on strategic issues, looking at the tensions in the region, what is the kind of alignment, military, technological, strategic alignment that we are seeking with Singapore?
Singapore, as I said, is our comprehensive strategic partner. Our defense and security relationship is the understated part of the collaboration. It is very active, very good. We have frequent political exchanges in the defense side. We have frequent naval ship visits here, and that is an ongoing part of the relationship. We have the Shangri-La dialogue going on starting today. We have the Chief of Defense Staff from India who has come here to participate. He will be meeting the new Defense Minister of Singapore and his counterpart here. So that part of the relationship is also very, very active.
Finally, on the aviation sector, how do you expect India and Singapore to work together to increase participation of Singapore Airlines in India, having more air routes as well, and maybe have more MRO facilities too?
Three parts to it. The aviation sector. One, of course, the discussions on the air services agreement we are trying to schedule a meeting very soon and see where it goes. Second is this whole MRO space. Both SIA Engineering and ST Engineering, 2 big companies of Singapore, are well known for their MRO activities, and they are actively looking at going into India. SIA Engineering, in fact, along with Air India, has one unit in Bangalore, and they are looking at expanding. And the third area is the sustainable aviation fuel, where Singapore has kind of mandated their airlines to use some part of their fuel from sustainable aviation fuel, and some companies are looking at collaborating with some counterparts in India to have sustainable aviation fuel plants being developed in India.
We also visited the headquarters of CapitaLand in Singapore. Now, CapitaLand is one of the most diversified and one of the biggest real estate investors and developers here in Asia. We asked them about their view on India. The company wants to double their investments in the India market from $5.7 billion currently to approximately $11 billion by 2028. Diversification is a key strategy for them, and India plays an important role. Listen in as we speak to Andrew Lim, the Chief Operating Officer of CapitaLand. Andrew, thank you so much for being with us here on Global Lens, our new program.
It's a pleasure. Welcome.
What's your view on India right now? Singapore has always been the largest source of FDI into the country. What's your sentiment on India?
We remain very excited about India. India is one of our core markets. We started investing in India 30 years ago with the development of our first IT park in Bangalore. We see a lot of positive trajectory stemming from positive regulatory changes, structural changes, capital market, the opening of the capital market in India. We have had a lot of good feedback and investor interest from our capital partners. And our business, our core business in India through our 4 principal verticals continues to grow. So in a nutshell, we're very excited about the business in India that we are building.
As we walk in your office, and it's a very swanky building, I must say.
Thank you.
I must get a sense from you as to how much investments do you have planned for the India market, say till about a 5-6 year horizon?
We currently have about 8 billion of funds under management, again, slowly, painstakingly built up over 30 years. The ambition, as I mentioned, is to more than double that in the next 3 to 5 years. So by 2030, we would like to double that to more than 15 billion in funds under management, which gives you a sense of our optimism, but also the confidence that we have that the Indian market is ready for such investment.
Right. Are there certain projects or acquisitions that we could hear of in the next 12 to 18 months, possibly, as far as India is concerned?
Absolutely. If we execute well and a little bit lucky with good fortune, otherwise we will not be able to hit our doubling of FUM. We have built up a business principally on 3 platforms. The traditional IT business parks, which has done phenomenally well and remains our anchor business. We also have a thriving logistics platform that we've built up. And we have started most recently a data center funds business with the investment into 4 data centers in 4 separate cities. So these are our core pillars which will form the anchor and the basis of this doubling of funds under management. We are also interested in beginning to invest into other interesting and exciting sectors such as renewable energy and credit.
Okay, I would also like to ask you about what can be done in terms of making India a more attractive FDI and business destination, or as a place to do business. If there were certain things on top of your mind or recommendations, what would those be, Andrew?
Well, candidly, I will have to say that India's not been the easiest place to do business in. I would say bureaucracy is probably a big one. Tax has been a common cause of complaint and frustration for many investors. But I think what has changed substantially in the last, say, 2 to 3 years is that the government has recognized that these are impediments to making India as a favorable and premier destination for global capital. And we have seen real change, concrete change in tax reform, land reform, enforcement rights, and the ease of capital to both come into India and be repatriated out, which are key hallmarks of a premier investment destination for global capital partners. So if we can continue with this momentum and demonstrate to capital partners that this is here to stay, I think all the ingredients are there to continue to promote India as a premier destination for global capital.
A lot of tariff uncertainty around the world right now. Whether tariffs will stay or will they go. There is now a court ruling in the US as well. How is that impacting your business and plans going forward?
It certainly isn't helping or making things easier, but it's safe to say that the core fundamentals of real estate investment remain. First of all, you need to be localized. Real estate is a very local business, so we believe that as Asia Pacific's premier asset manager, we need to have teams on the ground to be able to continue to originate good real estate opportunities. And then you have to marry that up with access to capital partners, with these structural, capital, tax efficiencies that capital is seeking to have, because they will have multiple destinations that they can choose to deploy their capital in. I would say that India's relative ranking as a preferred investment destination has risen significantly over the last few years. And I think that allows us to position India and allows India to position itself again as a relatively preferred destination amidst all of this uncertainty with respect to tariffs and geopolitics and so on and so forth.
Is this current geopolitical situation making you hold back on future investments?
It is making us be much more circumspect and careful and disciplined, which is what our capital partners are expecting from all responsible asset managers. So we hear the phrase that never waste a good crisis. I think that is absolutely true. Crisis begets disruption, and disruption begets opportunities. So our capital partners are looking for thought leadership, looking for good ideas to put their capital into, and good ideas are coming. But one should not rush into such ideas. One, you have to do your homework, you have to understand the landscape, understand what could go wrong, for which there are many such sources. And so I think that's incumbent on us as a good fiduciary for foreign capital, for domestic capital, to ensure that we make proper decisions for all of these opportunities which we know are going to come.
Could this lead to a slowdown in the real estate sector, investments in the real estate sector, not just in Singapore, in Asia, in India?
I think to your earlier question, we should be more circumspect. We should not be rushing headlong into investments. We should be studying them carefully. The nature of the investment opportunity might differ, and you could have different pockets of investment opportunities. These could be structural and systemic, such as the need for greater housing, the need for data centers as we digitalize ourselves, but also give rise to lots of opportunistic and more tactical situations as disruption inserts a layer of uncertainty and distress, if you will, between buyers and sellers of real estate. So you've got sort of two ends of a barbell that are both equally compelling, provided you do your homework and you have access to capital partners that share your thought leadership in these sectors.
Right. You've been reducing your exposure to China. What's your view on the China market as of now?
China is, we remain long in China, and China is a long game for us. So yes, there are structural geopolitical challenges in the short term that require us to take a hard look at our overall exposure to China, but we remain long and constructive on China. And the key, again, is to marry the right opportunities, which are still there, with the right capital pools who remain interested and see what we see insofar as China is concerned. And that's just the process of slowly decoupling from capital partners who no longer wish to be in China, and marrying opportunities with capital partners who want to be in China. And there are many such partners.
Yeah. Could you give us a sense as to, right now, what would be your sentiment, what would be your outlook on real estate growth in the Chinese market? Because that clearly has a ripple effect on other economies as well.
It does, but as you've heard before, China is in the midst of its own strategic and pivot into a domestically driven economy. China, as you know, has always traditionally been an export-led economy. They are now realizing that they have to sort of rely much more heavily on their own domestic economy to ensure that growth is perpetuated. And so that actually changes the way that they look at real estate and the way we should look at real estate in China, as well as thinking about the right capital partners that will be invested and are vested in such changes. So I would say that it's not so much a reduction or a less reliance on real estate, but it's the way that investing in real estate is going to change in China, and we must change along with it.
All right, Andrew Lim, thank you so much. It's a pleasure having you here on Global Lens on CNBC-TV18 Prime, talking about the CapitaLand story, about your plans to diversify and the importance of India as a market for you as well.
It's my pleasure. Thank you.
On that note, we take a short break, but don't go anywhere. When we return, we'll speak to veteran investor Samir Arora of Helios Capital here in Singapore about the view on the Indian stock markets amidst geopolitical uncertainty. Welcome back. You're watching our new show, Global Lens. We're joining you from Singapore. The question we're asking everyone here is, what is the mood on India amidst geopolitical uncertainties and the tariff wars that Donald Trump has unleashed? And also, what do they think about the India-China competition as well? We caught up with Samir Arora of Helios Capital to understand his view on India and how he decodes the India story. Thank you very much, Samir, for joining us here, taking out time for us in Singapore. And thank you for being with us on our show, Global Lens. You know, what we'd like to begin by asking you is that there is a lot of geopolitical uncertainty right now around wars, around tariffs. How do you see the India opportunity amidst all of this?
Well, I think that right now India has a few good things happening for it, or going for it. First is that the world seems to be upset with US more than they are with us and others. Right. And therefore, I think that the international investors and maybe even US investors will reduce their exposure to US going forward, even if the US market does well. Because over the last 15, 18 years, the world has put about 70% of its investments into US, taking the MSCI world market as the index as the benchmark. And previously it used to be in the 50s. So you could have said it last year also that 68 is too much or 65 is too much. But at some point, you know, things converge and you feel. So we also have a global fund, and we ourselves are going to have now around 50% of our global fund into US instead of the 70 odd. So if there is that flow away from US, then the rest of the world benefits. And I think India is also one more attractive contender in that.
Right. And
you can see that already in the flows from foreign investors from April onwards. India's got about $5 billion. And prior to that, for 5-6 months, there was some 20 odd billion of selling. So you can see it also, and this could be the logic. Because the whole world ex-US is seeing flows.
Right. Now, Singapore has always been one of the top destinations from where FDI comes into India from. Almost $160 billion of FDI has come to India from Singapore in the last 24 to 25 years. What do you feel, who do you feel will actually be the winner? There are several countries competing for foreign investments or diversification of investments, the China 1+1 strategy as well. So how do you think India is positioned to win amidst the Asian
So that's
peers?
what I was saying, that India has an advantage relative to the last few years on flows. And that is important because over the last 2 years, domestic institutions were buying and foreigners were selling. So the scenario where the foreigners are not selling and maybe even buying is itself attractive. The second positive is the move away from China. Again, even if there's no tariff arbitrage, although currently there is, but even if there's no tariff arbitrage, I think big companies, global companies will want to diversify, which they started after COVID, where companies may have felt that you can't put everything in one market and this thing, because resilience is also needed, not just lower costs, etc. And then they did it, and India got some business from Apple and others. And now there's a second round of that same sort of reminder that you should not do everything in China. And so again, there will be some beneficiaries, at least at some level. So if both these things happen, rest of India was anyway doing well. As long as we get flows and we get some new jobs, middle income jobs, some export potential, then we can move along as we were moving with these two extra things happening for us.
You know, Samir, a question that we were talking about FDI earlier, and why I would like to ask you this is because why the gross FDI numbers are 14% high at 81. Net is a record low, 96%
but
down.
Actually, it is
about $350 million.
But I disagree with that. Because this is primarily private equity guys. This will now always happen. Because if the private equity guy puts in together, these guys put in say 50 billion in a year, which is what they were putting, then plus minus 7 years, they will want to take out 100 billion. Let's say they make 13-15%, whoever is successful, and so maybe they take out 80 billion. So that time there'll be an 80 billion outflow because there's a 50 billion inflow, and that in that year will dominate any FDI of. So the whole game is that this will now, in net numbers, not look very big, but the private equity guy is the new FDI, and he's then handing over that company after it is made to the domestic investors, and then a second round of this thing comes. So in one sense, you can say it's you have to double up every time. You put in 50, after 7 years you have to take out 100. Then somebody else should put in 100, and after 7 years they will take out 200, but that is the new game. Because the amounts put in by private equity, which has a finite lifespan, is going to overwhelm these old companies putting FDI into India.
Right.
So,
in terms of the FTAs, we're looking at a lot of activity to have free trade agreements. We could possibly have a free trade agreement with the US, an interim agreement by the end of
This
June,
year.
by the end of June, and a full one by fall when Donald Trump comes. How do you think these FTAs position India as an investment
So first thing,
destination?
I don't think that sealed and signed FTAs can happen so fast.
Yeah.
But he's willing to do that. Trump is willing to work with framework, and we will also go along. For example, India-UK agreement. I don't think actual implementation will be before 1 year. I guess it has to be going through our parliament and their parliament and so on and so forth. But as long as we know, and more than us, the companies which have to invest in India know that broadly the agreement is there, that USA is not overly penalizing India, and that India has also responded well. These guys will come in without the formal, as long as they broadly know that this is the tariff structure, and that is already happening. So in that sense, this event will, of course, from a stock market might be useful, but for corporates, it's an ongoing thing. They might already be willing, as soon as there's even a simple announcement, doesn't need a formal signing.
Absolutely.
But I think formal signing will take longer will talk longer than.
And to take shape and the things to start
For
benefiting
everything.
anybody. We were speaking to other investors here in Singapore, and they said that they are right now cautious when it comes to putting money, more circumspect because of the global uncertainty. India clearly is a area where they want to diversify. They feel that India as a country, one of those countries which should get preference. But if we have to enjoy and rise up to this opportunity, what do you think India needs to do from the point of view of making interventions, easing up policy?
So India, from a pure, the act of investing, that is now quite okay. In the sense that FPI approvals come fast, the tax issues for foreigners are sorted out in that sense, whatever it is. I don't agree with that, but it is what it is. So now it is more for the companies wanting to do FDI and all. For the fund managers, they should not be waiting, according to me, because the trend away from US is very, very clear. There have been reports, numerous reports on how suddenly ETFs, which were ex-US world ETFs, so everything except US, have been gaining flows and market share and all that. So they should not be waiting. Please go back to them and tell them, don't wait. I don't think the Indians are waiting. And you can see that in the aggregate FII flows. But what India needs to do, that way there is a long list of things that can be done. But broadly, from the approval of investing, FPI, tax related, all that is now more or less okay. India, UAE, Singapore, UAE and Mauritius, those treaties at whatever level they are working well, because we are also benefiting from India-Singapore treaty.
All right. So according to you, which would be the possible areas now where you believe there will be strong growth? At Helios, you have, of course, from time to time, you diversify your portfolio, add new things. Which are some of the areas, sectors or stocks in India you'd be the most excited about right now?
So right now, we are most excited about the financial sector. That includes banks and non-banks. Non-banks basically means mostly for us capital market guys, asset management companies, brokers, stock exchange, depository. That is one group we like because we like the stock market. Secondly, we like the old private sector banks. In that, the number of banks have shrunk a lot, as you know. And the guys who are remaining are the big guys. And these guys did badly for a few years in terms of stock market performance.
Correct.
And one reason for that was the FIIs were selling, and they are big owners. And now if FIIs come back, and I believe they are 100% coming back or are already back, they also like the large financials, and therefore that pressure would also go away. So financials is our number one choice, followed by some consumer. And the sector we don't like, which is the third big sector, is Indian IT services.
Samir, thank you so much for taking out time for us here in Singapore. It was wonderful talking to you.
Thank you so
and
much.
Lovely hearing
Best of
your
luck
views
for your
on,
new show.
on the India-Singapore story as well.
You very
Thanks again.
Thank you.
On the final cut this evening, Indian origin teen Faizan Zaki has been crowned the 100th Scripps Spelling Bee champion. The 13-year-old from Texas was the runners-up last year after he lost in the tiebreaker round. This year, he's clinched the title and has taken home a $52,000 prize by successfully spelling the word éclaircissement. This is a French-derived word which means enlightenment. That's all we had time for on this special edition of Global Lens. With video journalist Saroj Singh and me from Singapore. Thank you for watching. Goodbye.
Present the trophy to Faizan.
Faizan Zaki, you are the 2025 Scripps National Spelling Bee champion. And on behalf of the EW Scripps Company, I'm pleased, really pleased to present to you with the Scripps Cup. How are you feeling right now?
I don't even know. I don't know what to say. I'm just really happy.